Welcome to the 10th deep dive of Baatcheat, our weekly conversations where we give you the cheat sheet on the world of electric vehicles and batteries. Today, we're zooming in on two global giants shaping the future of electric mobility, China and India. As we've explored in previous deep dives, China continues to dominate, really, the global electric vehicle and battery landscape with astonishing speed and innovation. But what's equally captivating, maybe even more so in some ways, is the massive future potential brewing in India, driven by its immense domestic demand.
That's exactly right. We've got some fascinating articles and insights this week that truly paint a picture of, well, strategic maneuvering and rapid evolution in both countries. Our mission today is to extract the most important nuggets of knowledge, helping you understand what's happening, why it matters, and, what's potentially next in this electrifying race.
All right, let's unpack this then. We'll distill these key news snippets into a clear, engaging story. Let's start with the latest updates from China.
Okay. Kicking things off on the China front.
Mm-hmm.
We're seeing some truly staggering numbers and pretty impressive production milestones. It really underscores their continued dominance.
What's fascinating here is just the sheer scale and momentum. Preliminary data from the China Passenger Car Association for June 2025 shows passenger new energy vehicle retail sales hitting 1.071 million units.
Wow.
Yeah, that's the second consecutive month above the 1 million mark. That's a 25% year-over-year increase.
25%.
And critically, year-to-date cumulative retail sales are now up 32% to 5.429 million units. And get this, the penetration rate was 52.7% in June.
Over half.
Over half of all new passenger vehicles sold in China last month were new energy vehicles. It's quite the milestone.
Incredible growth, and BYD is certainly a major force in that expansion. We just saw news that their incredibly affordable compact electric vehicle, the BYD Seagull.
Oh, yes. Seagull. It's reached a production milestone of 1 million units. That's production, not just sales.
That rapid scale isn't just about the production lines themselves. It speaks volumes about China's sort of unparalleled control over the entire electric vehicle supply chain. The Seagull, first launched back in April 2023, starting price around, $10,300 US 8s in packs. It quickly became BYD's best-selling single model.
Right.
Over 60,000 units sold in May alone. They've even introduced a new variant recently, priced at RMB 78,800, offering a 405-kilometer China light-duty vehicle test cycle range.
CLTC.
Yeah, CLTC.
Right.
Now, while 405 kilometers CLTC sounds impressive, it's typically a more optimistic standard than what you'd see in real-world driving or under, say, EPA ratings in the U.S.
Sure.
But it still signals a pretty robust range for urban commuting. And it's even making waves internationally, available in Europe as the Dolphin Surf. This kind of rapid, high-volume global expansion, it's really only possible with that deep vertical integration they have.
And speaking of the supply chain and strategic manufacturing, we learned that contemporary Amperex Technology Company Limited, CATL, has broken ground on a massive $6 billion battery manufacturing plant in Indonesia. What's the strategic play there?
Oh, this is a truly significant investment. Not just the capital, but it's about securing raw materials and global reach. This joint venture, it's with Indonesia Battery Corporation and PT Anika Tambang, aims for a total battery capacity of 15 gigawatt hours.
15? Enough
to power up to 300,000 vehicles, roughly.
Mm-hmm.
And Indonesia is strategically pushing for a 100 gigawatt hour capacity overall to achieve, independence in the sector. Plus, this deal involves developing local nickel mines and smelters. It's a full supply chain approach, really, designed to reduce reliance on maybe single-country supply and de-risk global production.
Makes sense. And closer to home, CATL is innovating with this factory-in-factory model right inside Series Superfactory in Chongqing. That sounds efficient.
Yeah, efficient is one word for it. This factory-in-factory model is, it's kind of a game changer for efficiency and agility. It integrates core component suppliers directly into the vehicle manufacturing plant, allows production line adjustments in under 20 minutes.
20 minutes?
Yeah. It isn't just about speed. It's about potentially redefining the manufacturing paradigm, dramatically improving quality control, enabling faster iteration of vehicle designs. CATL's new high-end battery pack production lines there, they say they're their most advanced, intelligent, and digital ones, shows how tight integration can unlock new levels of manufacturing prowess.
And those cutting-edge batteries are going into some equally cutting-edge vehicles. Huawei's 80 brand. They're planning to launch a new model featuring a sodium-containing Pulse-C battery pack from CATL. I'm curious, what are the implications of a sodium-containing battery? and 12C.
Okay, so this is a major technical leap forward for a couple of reasons. First, that 12C charging capability.
Right.
Means the battery could theoretically be charged with power 12 times its capacity. Think a full charge in under 10 minutes.
Under 10 minutes.
Wow. Yeah, a significant improvement for quick top-ups, reducing range anxiety, especially for their extended range electric vehicle and battery electric vehicle variants. And crucially, as you said, it's a sodium-containing battery. Sodium is far more abundant and cheaper than lithium. So it offers a path to more affordable electric vehicles, though typically maybe with slightly lower energy density for now. But this innovation broadens the raw material base, could drive down the overall cost of EVs in the long run.
Beyond these impressive production and tech advancements, the Chinese EV market is just fiercely competitive, isn't it?
Oh, absolutely.
We saw some interesting shifts. The Tesla Model Y facing what was called an unprecedented challenge from Xiaomi's new electric sport utility vehicle, the SU7.
Yeah, the SU7. What's fascinating here is how consumer demand is responding to, well, a new kind of competitor. The Xiaomi SU7 starts around $35,000 US, saw over 200,000 pre-orders in just 3 minutes.
3 minutes.
3 minutes. Now, while this has stretched delivery wait times way out, over a year for some variants, it clearly shows strong consumer demand that's impacting incumbents like Tesla. And this isn't just about pricing, it's about the whole ecosystem Xiaomi is building. They're leveraging their tech empire, smartphones, smart homes, to create this deeply connected user experience.
Something traditional automakers might struggle with.
Exactly. It really appeals to a tech-savvy generation.
This intense domestic competition and rapid production also mean China is now looking strategically at its exports, right? Leading to new policies like tightening used car export rules. What does that move reveal?
Well, this move by China's Ministry of Commerce seems aimed at standardizing practices, ensuring quality. Vehicles have to comply with national standards, undergo third-party inspections. But it's also an effort to address this issue of zero-kilometer used cars.
Ah, right. The ones registered but not driven.
Exactly. Vehicles registered as sold with little to no mileage. It's a practice that often arises from manufacturers or dealerships pushing to meet sales targets or clear inventory. It can kind of distort the new car sales figures, which regulators are now trying to curb for a clearer market picture. So this policy might provide an outlet for that excess inventory while maintaining quality control on exported vehicles.
Interesting. Okay. Finally, on the China battery innovation front, a Cherry-backed company called Anhui Anhua New Energy Technology. They've produced their first batch of solid-state batteries. This sounds like a potentially major step.
Oh, it's a very big deal for the future of batteries. Solid-state technology promises higher energy density and improved safety. These are engineering samples, mind you, but with an energy density of 300 watt-hour per kilogram.
300? How does that compare?
Well, typical current mass-produced EV batteries are maybe in the 250 weight-kg range. So 300 weight-kg range is a significant leap. It means more range or lighter battery packs for the same range. And they've also passed the stringent no fire, no explosion standard, which is obviously crucial for safety.
Absolutely.
Anhua aims for gigawatt-hour level production, with plans for even higher energy density versions in the coming years. It could really redefine EV performance down the line.
Okay, let's shift gears now to India. The story there feels like one of rapid ascent and strategic pivots, especially in that huge two-wheeler EV market. It's a fascinating contrast to China's established dominance.
Indeed. According to the Vahan data for June 2025, electric two-wheeler registrations surged 32% year over year, so strong growth. But what's truly fascinating here is the shift in market leadership. You've got legacy players like TVS Motor and Bajaj Auto quickly grabbing market share.
The traditional motorcycle companies.
Exactly. TVS Motor topped sales for the third consecutive month, over 25,000 registrations. Bajaj Auto came in second, over 23,000 units. Meanwhile, Ola Electric, which, once had this dominant 46% share.
Yeah, huge share.
It's seen its share basically half to just 19.2%.
Wow. What's driving that shift?
Well, it seems to highlight the critical role of established trusts, extensive service networks, and maybe broader product portfolios that traditional players offer. Things that newer entrants like Ola are still, building out. Trust is a big factor.
So the traditional giants are really leveraging their existing strengths. And Hero MotoCorp is also making a play with their new Vita VX2 electric scooter. What's their strategy for broader accessibility? It looks interesting.
Right, the Vita VX2. It's available in VX2 Go and VX2 Plus variants and offers a battery as a service option, or BAS. Yeah, this is potentially a key strategy for wider EV adoption in a price-sensitive market like India. It lets customers pay a significantly lower upfront price. I think it's as low as 59,490 Indian rupees for the VX2 Go, and then you subscribe to battery usage. That includes swapping and maintenance.
So it lowers that initial barrier to entry?
Precisely. Reduces the sticker shock, simplifies ownership. Crucial for India's massive two-wheeler market.
Makes sense. Okay, beyond two-wheelers, major OEMs like Mahindra, and Tata Motors are making big moves in other EV segments. What's the scale of their ambition?
Oh, it's pretty bold. Mahindra, for instance, they've outlined a plan to triple their last-mile EV volumes from FY25.
Triple them.
Yeah, and aim for 20–30% of their total portfolio to be electric sport utility vehicles by FY27.
Ambitious.
Very. They're introducing new electric SUVs like the BE6 and XEV9, built on India's first pure electric platform, IGLO. This platform, it not only offers 5-star fraught new car assessment program safety and impressive ranges, but also signifies their commitment to building a whole EV ecosystem.
More than just the cars.
Exactly. Charging solutions, financing, even renewable energy integration. It's a holistic approach.
And Tata Motors, they've been a leader for a while now. They're also pushing boundaries in the electric SUV space, starting production of their high-end Harrier electric vehicle.
Yes, the Harrier.EV. This is a significant launch for Tata. Deliveries are beginning this month, actually. It's built on a new generation platform, offers both rear-wheel drive and quad-wheel drive configurations. Apparently, the quad-wheel drive variant boasts the highest torque and fastest acceleration in an Indian SUV. So they're aiming to solidify their dominance in that premium EV segment.
High-end features, too, like that 540-degree camera.
Right, the surround view system. It showcases India's growing capability in high-end EV design and manufacturing.
So with all this vehicle development, what does it mean for the broader EV landscape in India? Thinking about crucial supporting infrastructure and materials.
Good question. We're seeing exciting developments there, too. Companies like Kazam, they're an EV energy tech company from Bangalore, just raised $6.2 million in Series B funding.
Okay.
They've already onboarded over 68,000 charging points, facilitated over 5 million charging sessions, shows the rapid build-out of charging infrastructure. This kind of investment in enabling tech is just foundational, isn't it? Without robust charging, mass adoption just can't happen.
Absolutely. And on the crucial issue of materials, Etero, an e-waste and lithium-ion battery recycling company, is investing 100 crore Indian rupees.
Which is about, what, $12 million US?
Roughly, yeah. To scale its rare earth element recycling capacity from 300 tons to 30,000 tons. That sounds highly strategic.
It is indeed strategic, and it directly addresses India's national critical mineral mission. The goal is to significantly reduce import dependence on rare earth elements.
And counter China's dominance there.
Exactly. Etero uses patented processes to recover elements like neodymium, praseodymium, dysprosium from electronic waste, and end-of-life lithium-ion batteries, apparently with high efficiency and purity, so it offers a cleaner, more sustainable, and domestically secure alternative to conventional mining, vital for long-term EV production in India.
And another interesting innovation we heard about is Volectra partnering with Gendamark India to manufacture magnet-free EV motors. Tackles a major supply chain vulnerability, right?
Absolutely. This eliminates the dependence on those rare earth materials like neodymium and praseodymium. They're critical for traditional EV motors, and their supply chains are often concentrated, vulnerable. Volectra's virtual magnet motor platform, combined with Gendamark's manufacturing expertise, it signifies a potential paradigm shift in motor tech, offering sustainable, production-ready drivetrain solutions that reduce those geopolitical supply chain risks.
Okay, so wrapping up the India picture, the overall EV penetration rates for June 2025 are telling 7.3% for two-wheelers.
Still relatively low, but going fast.
Right. 33.4% for passenger three-wheelers, 21.3% for cargo three-wheelers. Much higher there. And 4.5% for four-wheelers. Clearly significant room to grow, but definite momentum in certain segments.
And if we connect this to the bigger picture, on Mahindra's call for manufacturing-led growth really ties everything together. He views the global reorganization of supply chains as a, quote, once-in-a-generation opportunity for India to become a credible global manufacturing base.
Leveraging democratic stability, geopolitical trust?
Precisely. It's about balancing business expansion with national development, building a self-reliant EV ecosystem. This proactive national strategy is truly inspiring and, I think, positions India as a major player in the long run.
So, summarizing then, we've taken a deep dive into the EV and battery landscapes of China and India. China, continues its massive expansion, relentless innovation, EV sales hitting new highs, advanced battery production like that factory-in-factory model, rapid charging sodium batteries.
Yeah, the scale is just immense. And India, while definitely earlier in its electrification journey, is showing incredible dynamism. We're seeing legacy OEMs making significant inroads by leveraging trust in their networks, innovative solutions emerging for charging, and crucially, recycling critical minerals. Plus, there's that clear strategic vision for manufacturing-led growth and supply chain independence. The shift in India isn't just sales numbers. It feels like a foundational change, driven by unique market conditions and that powerful drive for self-reliance.
It's clear that while China dominates today, India's unique approach, fueled by that immense domestic demand and the push for an integrated EV ecosystem, really positions it for massive future potential. It truly makes you wonder, doesn't it?
It does, and it raises an important question for you, our listener. Given these distinct but equally powerful trajectories in China and India, which specific area of EV or battery innovation do you think will emerge as the ultimate differentiator in the global market over the next decade, and why? What's going to be the key tech?
We love hearing your thoughts and feedback on these deep dives. Thank you for joining us for this conversation today. You can find us wherever you get your deep dives, and be sure to tune in next time for more insights from Baatcheat.